What's up, guys? Anthony here, Special Analysis. Welcome to the video. I often find that traders who decide that they like to go the software route, which there's absolutely nothing wrong with using software, they try to overcomplicate the crap out of it, right? When the whole premise of using software is to simplify the process, right? Like ultimately, that's what we're looking to do. We're looking to just simplify the process. Okay, so keeping that in perspective, I want you guys to take a really close look at this gold setup. Market pushes higher, like this is super early in the morning. We pull back, we fall into this period of consolidation. We finally get a push off of this consolidation, which supports this retest. Not only does that support this retest, we're literally testing and closing above a pivot point. Right now, these pivot points are computer populated. NinjaTrader populates them for you, and they're free. Okay, but you can use them to qualify your trade. So we're holding this consolidation, right? We push up, we pull back into the consolidation. This should now be declared support. The pivot point should be support. Here's our trend change, our pull through the profit band supported by the pivot point. This is our risk, right? About 19 ticks right here. And then we're off to the races to take profit at 52 ticks, to take more profit at about 64 ticks, and then finally on to about 137 ticks. Guys, you have to let the software do the job it's designed to do. Okay? I see so many people invest in software and then they start fighting it. Listen, if you want to do analysis and implement whatever approach to the market you want to implement, that's totally fine. But don't take that approach and then try to mix it with another approach, because more often than not, you've just created a disaster rather than a solution, right? The profit pack is designed to be used very specifically. A newly defined trend, a correction through the profit band into some form of support, right? We have two layers of support here. We have this consolidation and the pivot point. And guys, look, this thing explodes out, rips almost straight up. We got two predetermined targets here, right? Resistance 1, resistance 1, resistance 2. Like, you didn't have to do any guesswork here. You knew you were risking about 19 ticks to take profit at 52 ticks. Okay? And then more profit potentially at 64 ticks. And more profit potentially at 137 ticks. You knew what your risk versus your first reward was. Anything the market blesses you with after, you just gracefully accept. But you knew that you were risking, call it roughly 20 ticks, to try to take your first profit at roughly 50 ticks. If that is an acceptable number per your personal trade plan, your R number, your risk reward number, then this was a great setup for you, right? If it's not an acceptable number to you, then perhaps this wasn't the right setup for you, right? I mean, look at all this other junk here, right? None of this here on the rest of the screen qualifies with a correction through the profit band into support with predetermined resistance levels overhead. Guys, I encourage you to keep it simple, especially if you're using software. Use the software as it was designed. Okay? If you don't like the way it's designed, then don't use it. But if you invest in software and you plan to use it, you need to build an approach around it. You need to build a trade plan around it. You need to build a checklist around it. And you need to use it as it was designed to be used. Otherwise, you're going to hinder whatever opportunities you could have possibly taken advantage of. So, guys, if you like this content, I encourage you to like the video, subscribe to the channel so I can help more folks God bless. I'll see you in the next video. I hope you're having a wonderful day and that you took something away from this video that you can put to use in your own personal trading.